The aerospace and defense sector could be in store for a big year of change under the new Trump administration.
If investors are looking to play offense in 2025, should they stick with defense?
The defense sector used to be quite cyclical. I think what we are seeing now...
the Trump administration will soon have to deal with. And with that, let's bring in our panel.
In a tough market like this, there is always somewhere where the money is. And at the moment, some of that money is in the defense sector. Doesn't sound very exciting because some of the big guys are, well, antiquated. But while the giants might stumble, this one stock, and it's Leonardo DRS, is quietly crushing it. Well, not so quietly. It actually made my buy list last Monday. And for those of you who know my investing rules, you know I don't just hit the buy button when I see a stock I like. I wait for the perfect setup. And that setup just occurred, so I want to share that with you. The stock blew up 8.8% yesterday, and it's trading higher pre-market as I'm recording this. Now, if you want to learn how I actually spotted the stock 4 days before it broke out, then join my free educational webinar on Saturday, 11 a.m. New York time. I'll teach you the exact rules on how to spot these entries and most importantly, when to sell. It's a 90-minute webinar. It's completely free of charge. Grab yourself a free seat if you want to retire early. Actually, only if you want to retire early. If you don't want to make money, don't show up. The link to this is down below, felixprehn.org/get-free, and it's going to be fun. But maybe you're thinking, Felix, I don't actually believe that you spotted this stock before it moved. Now, I'm going to, of course, walk you through the whys and the hows of the stock in the next couple of minutes, and I'll be really quick about it. And I also want to give you a big warning. If you're just going to run out like a lemming and buy the stock right now, you're very likely to lose money. So watch this thing till the end if you really want this to be the foundation for your research. And then, of course, do your own research, because my research is done by my kittens. I'll show you more about those in just a moment as well. But honestly, I like a skeptic. I like someone who goes, I'm not really sure I believe this guy. Who is this guy with a big hairdo? Okay, so in our private community, and again, I'm not selling you anything here, we've got I put a week notes out every single week, sometimes a little bit more often, but certainly every single week. And if I look at the notes here from the 21st of April, actually, so I spotted this thing even earlier, didn't I? Yeah, even earlier, about 9 or 10 days ago. It opens this document for you, and I write that every week. It tells you quite a lot about what the market's doing and so on. And then there's a section in here, what I'm buying, and there's a little document I link to, Felix buy orders. So in our private community, and I'm not trying to sell you anything, you don't have to join us, just come and learn all the free good stuff here. That's what it's all about, spreading the love. I post every week a free note. And if I click on that note, it opens up a document which walks you through what I think the market's doing, and it also gives you a link to what I am buying. And I'm always transparent with my students. That's really why I do this. So that's the document. It opens up here, and you see a bunch of things, and one of them is Leonardo DRS, and it was trading at $37 then, and I said, I'm going to buy it if it closes above 38. More on that in a second, right? So there we have it. Now, maybe you're thinking, I still don't believe you. All right, fine. Think or swim. Here's my brokerage. You can see on the 1st of May, at 9:32 p.m., I'm 12 hours ahead of New York right now. I'm in Hong Kong. So 2 minutes into the market open, we bought 250 shares of this. Small position. That's how I do it. I don't like go all in on a stock usually. So about $10,000 on this particular stock. So you can see I'm being cautious and careful in this market. Why? Because it's a mad market, right? First and foremost, Leonardo has a backlog of orders that reached $8.6 billion. And what's even more telling, and this is something I specifically look for in defense contractors, and probably the most encouraging thing about the whole thing is that DRS has begun to return capital to shareholders. They've paid their first dividend, and they've initiated stock repurchases, signs of a company that's generating excess cash and has confidence in its future prospects. Particularly noteworthy, and this is something I picked up during the Q&A earnings session, is the potential for up to $150 billion in front-loaded additions to the US defense budget. And this represents funding well beyond the baseline defense budget, and companies like DRS with the right capability are positioned to capture outsized pie slices of this spending. There's kind of pies that are so large and so colorful that RFK would be, jumping off the wall going, don't eat it, don't eat it. Well, we have our Zempic, don't we? Anyway, their portfolio directly addresses critical Department of Defense initiatives that are getting this money. And this includes layered air defense, counter-UAS systems, absolutely vital given drone warfare development, shipbuilding, throughput improvements, and broadly modernizing technology embedded on combat platforms. Now you may ask, Felix, what specifically makes DRS different from other sort of mid-tier defense contractors? This is a 10 billion company. Well, the answer lies in their focused approach to high-demand areas like advanced sensing, tactical radars, force protection, next-gen computing with AI, and so on. And these aren't buzzwords, actually. They're exactly the capabilities that are getting priority funding under Trump's Department of Defense. Now, let me take you a little bit deeper into what I believe is the most compelling aspect of Leonardo DRS's investment thesis, their expanding role in naval modernization. According to management, and I'm quoting directly here, improving and expanding shipbuilding is a key national priority. Our customers' behavior reflects an incredible urgency. Now, this isn't just executive optimism, it's backed by substantial funding commitments. And during the Q&A session, analysts reference approximately $34 billion of funding potentially available for shipbuilding through mechanisms like the reconciliation bill that's being reconciliated, whatever that means. And there is another crucial element making this investment thesis particularly resilient. And then we're going to look at the chart and tell you, well, where I'm buying it and where I'm selling it. And unlike many defense contractors with significant international exposure or commercial business segments, DRS is basically insulated from tariff stuff, global stuff. Management specifically said, and again I quote, our customer base is largely US defense in nature. And their direct supply chain is predominantly comprised of US-based companies. So we now know what we're dealing with here. Let's look at the most important part, the stock chart. Now you might be thinking, Felix, the stock chart's not the most important thing, it's fundamental research. Well, yes, if it was 1968, you would be right, but given that we are post the 1970s, investors who look at stock charts beat the ones that look at fundamentals. And it's not a popular statement, I get it. Wall Street likes to keep up this myth that they know something and that they read accounts and P&L statements, and that's insanely important. And there's a little bit to that, which is why we looked at some of this. This is a chart on TradeVision.io platform that we built. You can get a free trial to that if you like. And we've got on here actually a thing called the breakout indicator. You see that here? There and here, and just yesterday, so I'm recording this. So what makes a breakout? Okay, I'm going to walk you through the real depths of that on Saturday, but essentially we want lots of volume and we want the thing to be peaking up very significantly above resistance. So why did I look at this chart 5 days or 4 days before it actually happened? Well, the thing to understand is that stocks have resistance zones on the way up. You see that little blue box I just drew in there? So I'm basically looking at the two highs here, that high there, this high here, and then we had a bunch of them here. And that was just over $37, just under 38. And the sort of general zone was about 37.90, something like that. So when we exceed that, and we do that with some oomph, and the oomph is volume. What does volume stand for? Volume just means lots of people are buying or selling the stock. I mean, the stock goes up massively and there's lots of buying. You know, it isn't just you and me and Winston buying it, but institutions, the big money, the big boys. And when the big boys pour in, that's a good thing. It helps to drive the stock up even more. And then all the investors and all the traders in the world look at the same rules, by the way. Like, I didn't come up with this. We all look at the same rules. And this flags to us, we see the breakout and we go into TradeVision, we go, oh my God, there's a breakout, let's do something. And then more people buy it. It's sort of a self-fulfilling prophecy. So that's part of that. Now, one big caveat. Breakouts don't go up in straight lines. Let me show you a couple of them, right? So you see the beautiful breakout here in May 2024, right? Went up very nicely. And then what did it do? It went down a fair bit. And then it continued to go up, right? And I call this the second chance, right? Sort of forgiveness. It's a sort of, stocks are Catholic in nature, I think. And this one up here, again, big, beautiful breakout, nice volume, bounced off nicely, actually rallied to really quite a lot higher, and then came quite a lot lower again, sort of to breakout levels, and then continued, right? So the problem is that people don't appreciate that. People think stocks should go up in a straight line. Stocks don't go up in straight lines. But there is also a point when a stock, if it goes up, it comes down too hard, at which point we want to cut our losses or keep our gains. So ways to do that. Well, initially, I always set a stop loss, right? And I can tell you, I can't remember exactly where I set it, but I automate that. It's somewhere in this sort of general zone down here. And that's fairly generous, but it takes into account a little bit of the support we have in that general zone. And it gives us quite a bit of breathing room because this is a stock that moves quite a lot. I don't want to get kicked out of this thing too early. Or are we even a little bit lower? Let me have a look. Where are we on this one? 33 and a bit. Actually, we are a bit lower than that then. So we are actually pretty close to the 50-day moving average line down here, which is about down here. And that's potentially a big drop, right? So you need to then think about, well, am I happy with that risk level? And that's an 80% drawdown, right? So how do I deal with the risk level? Small positions, right? So if it's a percent of the portfolio and it's significantly less than that, and it goes down 18%, what am I losing? I'm losing 0.18% of the portfolio. You see what I'm saying? And I'm not massively in other defense-based stocks. So it's not like I'm going to lose all my money. The problem is people find one breakout stock like this, and then they put all their money on it, and then it goes down 18%, and then they go crying in the corner. And it's just lack of overall risk management. Risk managers make you make all the money. It doesn't sound very sexy, but this is kind of about as textbook a breakout as we can get, which is why I'm flagging it to you. I'm not saying you should run out and buy it. What I would actually say to you is don't buy it, and instead go into your paper trading account in Webull or in Thinkorswim or wherever you are trading or investing and buy it in a paper trading account, right? And then watch how it behaves and start to learn from that. So that's really the smart approach. You maybe think, but I want to make money today, Felix. What if this goes up and doubles like you say? Then I'm going to miss out. Yeah, you have to learn as an investor to not care about FOMO. We will miss out on loads of opportunities all the freaking time, and that's completely fine as long as we are in good things ourselves. So we have to get out of this mindset of chasing whatever the latest thing is, and first learning the rules, mastering the rules that every successful investor in the world has been using since about 1978, seriously, for that long. Yet somehow that knowledge hasn't made their way into retail. You and me, why not? Well, Wall Street likes to keep their cards close to their chest. Is how they can charge you fees for whatever they're doing. And most people who retire out of Wall Street banks or Chicago, trading houses and so on, they don't go onto YouTube and start talking about it. They just go and sit in their country manor and I don't know what they do, drink whiskey or something. I stopped drinking, so I needed to find another hobby. So this is my retirement hobby, and it's the most successful, most successful is the wrong word, most gratifying. I think that's the word. The most rewarding thing that I've ever done. And it's been tremendously successful for my students. And that's why I'm excited and happy and have a big smile on my face every day, because I set up my investments every week on a Sunday or on a Monday. It takes me about an hour. It's a nice long list that I go through, and they're all set up on certain conditions to buy something, on certain conditions to sell something. And then for the rest of the week, I chill. And I watch a little bit what's going on, but I don't actually do anything. I've done nothing at all week other than to share with you guys what's going on here. And this is one of those sweet kind of setups here where I'm just looking like, oh, I like this a lot. This is just looking really, really, really beautiful. So if you want to learn how to spot these yourself, because ultimately you can't rely on some guy on YouTube, right? Even if he does wear a pocket square. That is a good qualification, apparently. What you want to be able to do is look at this and go, I've got confidence in this because I understand X, Y, Z rules. There are only 3 of them. And when it goes up, you know where to sell. And when it goes down, you know where to sell. And unless you have that confidence, no matter how good the setup, you're going to cock it up. Not because you lack the ability, it's because you lack the skills. So skills can be what? Learned, exactly. All skills can be acquired. And I'm going to give you those skills if you join me on Saturday. 11 a.m. Eastern time, that's New York time, and we're going to have fun for about an hour and a half or so. You can ask me lots of questions as well. We'll keep going if you guys still have questions, and I will teach you this. We might even run through this as a real example, and we'll see a little bit more how it moves. But don't put all your money on one stock just because you saw something on social media, right? That is not the path to making money. Like, seriously, go and buy a lottery ticket. It's much cheaper, much lower risk. Instead, I want you to be motivated by seeing these things like, hey, Felix is making money. We had one last week that went up like 45%. And by knowing how to pick them, the whole thing becomes fun. Managing your money becomes fun. It takes very little time, a heck of a lot less time than anything else you could possibly be doing to make money with, at least in my experience from running a bunch of businesses. And it gets you to freedom. And freedom is absolutely freaking glorious. So come and join us. If you want freedom, you want to retire, or you want to retire better, come and join me on Saturday, felixfriends.org/webinar. And I wish you all the best.
Here's a little kitten update on them all. There's Sabrina and all the little darlings. You actually have their eyes open now, even though they're of course all sleeping. How many have we got? 1, 2, 3, 4. There's a fifth one behind there, that one at the back. So sweet. So sweet. And here's Toledo.